Hello everyone, hope you're having a great day today. It's July the 4th. I've got a few more news stories to cover today, so let's get into it. Bitcoin ETF race begins. Has institutional trust returned to crypto? 7 institutional firms have filed for a spot Bitcoin ETF in the US, including the world's largest asset manager BlackRock, driving optimism and higher Bitcoin prices. With the Bitcoin halving event less than a year away, several financial giants have filed applications for a spot Bitcoin exchange-traded fund, a scenario last seen before the 2020 to 2021 bull run. Institutional interest in the sector dried up after major crypto giants such as FTX collapsed amid a prolonged crypto winter in 2022. Bitcoin and many other cryptocurrencies traded largely sideways as several crypto exchanges fell under regulatory scrutiny. However, on news that major financial institutions such as BlackRock, Fidelity, Valkyrie and others were filing applications to list a spot Bitcoin ETF, the price of BTC recovered to over $30,000, spurring investment into the crypto market again. While several institutional giants have filed spot Bitcoin ETF applications with the United States Securities and Exchange Commission in the past, all have either withdrawn their applications or faced outright rejections from the regulator. The SEC approved the first Bitcoin futures ETF in October 2021, the ProShares Bitcoin Strategy ETF, which debuted on the New York Stock Exchange on October the 19th, 2021. However, the spot Bitcoin ETF filing by the asset management giant BlackRock has increased the chances of the SEC approving the first spot Bitcoin ETF. That's according to Bloomberg senior ETF analyst Eric Balchunas, who gives BlackRock a 50% chance of getting its spot Bitcoin ETF approved. The most recent spate of ETF filings began with BlackRock's filing with the SEC on June 16th. WisdomTree, Invesco and Valkyrie also filed in the days and weeks that followed. On June 28th, ARK Invest, which previously filed for a spot Bitcoin ETF in June 2021, amended its filing to make it similar to that of BlackRock. On the next day, asset manager Fidelity Investments also filed for a spot Bitcoin ETF. In total, 7 institutional giants have now filed for a spot Bitcoin ETF to date. Some industry observers believe 2023 to 2024 will be crucial for approving a spot Bitcoin ETF. Robert Quartley-Gennaro, Chief Strategy Officer of the cryptocurrency exchange Bitrue, told Cointelegraph that the timing is right as, quote, inflation is rampant and the money supply is a mixed picture, interest rates are high and businesses are seeing decent revenues, which means crypto will need to perform in an economic environment where rates and inflation are key considerations. End of the quote. Institutional trust in Bitcoin. Bitcoin has weathered the aftermath of 2022 remarkably well and recovered more than half of its price declining during the bear market, largely thanks to the continued interest of institutional investors in the asset. Indeed, there are significantly more institutional investors in the crypto market now compared with only 1 year ago. Until 2022, institutions kept a safe distance from the market, even with MicroStrategy stopping its routine BTC purchases. Many large funds and companies have become interested in cryptocurrencies and are exploring their potential to invest in them. Despite market volatility, global institutions show a steady interest in cryptocurrencies. Bitfinex Chief Technology Officer Paolo Ardoino told Cointelegraph that Bitcoin represents tremendous value in terms of its utility and unique nature as a perfectly scarce asset that cannot ever be debased. He said, and I quote, "The most traditional financial institutions recognize that," adding, "It's hardly surprising that at a time of record inflation in both major industrialized economies as well as emerging markets, that the value of Bitcoin is being better understood by markets." The recent new applications for Bitcoin spot market ETFs by some of the world's most important asset managers demonstrates that there is investor as well as issuer demand for Bitcoin, and that will only intensify. Apart from demonstrating increased institutional demand for Bitcoin, it will also attract new retail investors and encourage broader participation, Ardoino said. While many institutions distanced themselves from crypto over the past year, much of that was due to the public relations disaster brought on by FTX, with bank failures further exacerbating it. Richard Gardner, CEO of Modulus, told Cointelegraph that institutions foresaw the simmering of the crypto industry and decided to lay low and sidestep the political and public response in the aftermath of FTX, thinking they'd be able to revisit their decision before crypto surged. And a quote here is, "We're at the point where they're beginning to weigh the risk versus reward of stepping back into the fray. Most institutions will likely be far more cautious, given the FTX disaster. They're going to largely be moved based on the regulatory environment, as governments cobble together a full regulatory regime, and as bureaucrats decide how they plan to interpret the law. Institutions will gauge their response and move forward accordingly," Gardner said. MicroStrategy, the leading investor in Bitcoin and one of the driving forces behind institutional adoption of Bitcoin in 2020, has continued its buying spree in 2023. When the firm faced major losses as the BTC price plunged below $16,500, CEO Michael Saylor maintained it had no intention of selling and would continue to add more BTC to its treasury. MicroStrategy currently holds, or hodls, 152,333 BTC acquired for roughly $4.52 billion at an average price of $29,668 per Bitcoin. Institutional inflow revives bull run optimism. While the 2017 bull run was sparked by retail interest, the 2020 to 2021 bull run was sparked by institutional inflows, with the likes of MicroStrategy and Tesla and multiple other publicly listed companies adding Bitcoin to their balance sheet. Gracie Chen, managing director at crypto exchange BitGet, told Cointelegraph that institutions would act swiftly once they observe stable and predictable retail interest. Chen said, "The cumulative impact of institutions outweighs that of individual investors, and therefore they will continue to be a driving force for the growth of cryptocurrency market capitalization." She also stressed that growing interest from institutions could further crypto adoption, helping to spark the next bull run. Analysts expect that in the event of the approval of BlackRock's ETF application alone, there could be a twofold increase in the price of Bitcoin, considering BlackRock's potential institutional investor base and influence. The approval of their spot Bitcoin ETF would have a greater impact on the crypto market growth. With their Bitcoin spot ETF application, they will likely inspire competition among relevant financial companies. This will direct more funds from traditional markets to Web3. Apart from the institutional push, there have been major developments in the retail market, with Hong Kong opening the doors for crypto exchanges to offer services to retail customers. Ben Kaislin, vice president at crypto exchange MaskX, told Cointelegraph that during the previous bull run, US institutions were the primary drivers of the upsurge, and they were arguably not ready to engage deeply and behaved no different than retail, especially chasing gains and acting on hype. "I expect this bull market to be Asia-driven once again, perhaps with Hong Kong at the helm for the region, but based on my personal observations on the ground, I also expect a significant push to come from the Middle East, particularly from the United Arab Emirates, Saudi Arabia, and other oil-rich jurisdictions," he added. With the Bitcoin halving scheduled for April 2024, the rising interest of institutional investors is seen as a bullish sign for Bitcoin's price and the broader crypto market. Bull runs have historically started in the run-up to the Bitcoin halving event, where the amount of Bitcoin reward per block gets reduced by half every 4 years. The scarcity factor drives the price surge as retail traders and institutional giants rush to add to their Bitcoin portfolios. Next, we have the new Bitcoin Standard BRC-69 slashes data limit for ordinals. The innovation is recursive inscriptions, which extract information from already existing Bitcoin inscriptions to create newer ones. Bitcoin ordinals continue to boom, with a new token standard launched Monday. The BRC-69 standard brings with it an innovative way to reduce the time and cost it currently takes to make an inscription. Known as Bitcoin's version of NFTs, which allow for non-financial data to be stored on the blockchain, ordinals previously had a 4 megabyte limit which could be inscribed on Bitcoin. BRC-69 looks to bypass that limit through what's known as recursive inscriptions. Recursive inscriptions are a mechanism that allows users to extract data from existing inscriptions and use them to create new ones. According to the protocol's GitHub, the BRC-69 token standard is a way of recycling data already inscribed and reducing the current cost by more than 90%. The brilliance of BRC-69 lies in its simplicity, tweeted the team at Luminex, the launchpad announcing the new standard. Minters only need to inscribe a single line of text instead of a full image, adding that this text allows the final image to be automatically rendered on all ordinals front ends, using solely on-chain resources thanks to recursive inscriptions. Bitcoin's limited block space has long been a point of contention, sparking debate when ordinals launched, which drew huge transaction fees and a bloated blockchain. According to self-proclaimed NFT historian and ordinals collector Leonidas, recursives have massive implications since they allow users to elude the 4 megabyte limit. The sky is the limit, he tweeted. Bitcoin is essentially getting an internet where every file can request data from the other files on Bitcoin, he said. It's unclear yet exactly how people will use this, but it's undoubtedly an important moment in the history of Bitcoin. This is the latest in a series of exciting developments coming from the ordinal space. The most recent was Bitmaps, a protocol that offers a way for users to claim ownership over Bitcoin blocks, which has led it in the top place for daily Bitcoin inscriptions. Next up, Voyager outflows hit $134 million, but Celsius hasn't sold anything yet. Crypto lenders Voyager and Celsius are slowly working their ways towards making customers whole 1 year into bankruptcy. Celsius and Voyager, rival crypto lending startups that went bust last year, have been cleared to start shifting their crypto holdings, but only Voyager has been busy. Crypto markets shuddered at Celsius gaining court approval to convert its remaining cryptocurrency into Bitcoin and Ether starting on July the 1st. Celsius had around $600 million in crypto at the time. Per Arkham Intelligence, about 70% of those funds were already Bitcoin and ETH, with other tokens, Sans stablecoins, making up 162 million or so. As of Tuesday morning, Celsius has not moved any crypto at all. The firm, formerly headquartered in Hoboken, last shuffled crypto 3 weeks ago. It sent 17.3 million Matic, worth $11.3 million at the time, to the Polygon staking contract, where it would help secure the POS chain and earn staking rewards. About a week earlier, Celsius deposited 7.1 million USDC with institutional crypto exchange Falcon X. Voyager shrinks crypto portfolio 25%. Voyager opened customer withdrawals for 1 month starting June the 23rd, almost 1 year after it suspended operations before filing for bankruptcy a week later. The firm had been crippled by the implosion of Three Arrows Capital. The failed crypto hedge fund firm had earlier defaulted on a $665 million Voyager loan, from which neither Voyager nor 3AC ever recovered. On-chain data relied by Arkham shows Voyager's estate controlling almost $413 million in crypto on the day before it opened withdrawals last month. A steady stream of outflows has since reduced that figure to $307.5 million. That's a 25% drop, even though prices for cryptocurrencies featured in its portfolio have risen practically across the board. The total value of all outflows at current prices is $134 million. The uptick in on-chain activity indeed coincided with Voyager activating withdrawals. Blockworks reached out to its estate to confirm its outflows map to customer withdrawal requests, but has not received a response. In any case, USDC, Bitcoin, Ether, and meme coin Shiba Inu represent the bulk of Voyager outflows, with $52 million, $38.2 million, $1.7 million, and $1.7 million sent out to date, respectively. That's anywhere from 40% of its unit count in the case of USDC to 14% for SHIB. So there's still loads more crypto to be distributed. And lastly, FTX files lawsuit against ex-compliance chief Dan Friedberg. After publishing its public internal audit showing that FTX owes its customers $7 billion, the lawsuit confirms that FTX customers might get their money back after all. FTX, a bankrupt crypto exchange, has filed a lawsuit against its former chief compliance and regulatory officer, Dan Friedberg, after his alleged conflicts of interest involving Sullivan and Cromwell, S&C, and Ryan Miller, FTX's ex-US General Counsel. Friedberg claimed S&C exploited Chapter 11 insolvency proceedings to secure high service fees from FTX, leading to over $40 million in charges since November 2022. And a quote says, Friedberg advised Bankman-Fried, his trusted inner circle, and the FTX group on legal and compliance matters and significant transactions, ignored the FTX group's glaring lack of internal controls, and severed as a fixer tasked with, among other things, paying off whistleblowers who threatened to expose the true fraudulent nature of the FTX group enterprise. The lawsuit, in turn, brings serious allegations against Friedberg. It states Friedberg was hired under Sam Bankman-Fried, the former CEO and infamous founder of FTX. Father's insistence, who believed the company needed a dedicated overseer or someone to be on top of everything. His compensation included a $300,000 annual salary, a $1.4 million signing bonus, an 8% stake in FTX US, and additional perks, including a $3 million bonus in 2021 and $30 million worth of serum tokens. The lawsuit also alleges Friedberg's involvement in setting up multiple shell companies for FTX to open accounts, one of which had a false website selling electronic goods with no links to FTX or Alameda. It also accuses Friedberg of making hush money payments to silence potential legal threats. And another quote says, many US banks were reluctant to do business with cryptocurrency companies. Friedberg solved this problem by creating shell entities that concealed the involvement of FTX. End of the quote. When questions were raised about governance and regulatory matters, Friedberg allegedly offered severance packages rather than conducting proper investigations. The lawsuit further implicates him in preparing substantial loan agreements to FTX's founders, amounting to over $2 billion, which remain unpaid. FTX filed for Chapter 11 bankruptcy on November 11, 2022, followed by SBF Sam Bankman-Fried stepping down as CEO. Now John Ray III, the exchange's new CEO, is leading the bankruptcy proceedings. Ray started with a public internal audit last month to further, unquote, our stated objective of transparency. The audit revealed that FTX owes its customers around $7 billion in liquid assets. The lawsuit against Friedberg is just the next step to offer some solace to FTX creditors. That's all for today. Thank you for tuning in and listening. All source links will be left in the description or a comment. If you enjoyed this video or found it helpful in any way, I'd really appreciate it if you would hit the like button and leave a comment to let me know your thoughts on today's news. Also, don't forget to hit the subscribe button and the notification bell so you don't miss out on future updates. Hope you have a great day, and I'll see you all later.